So welcome to Business Ethics 1. This is the first part of a two-part lecture dealing with business ethics in our subject for the introduction to corporate governance. So far we've talked a lot about what corporate governance is and how it applies to business scenarios, but underlying all corporate governance principles will be ethical basis for all the decision making and all the conduct and the processes that happen in a business. There's no business decision that can ever be in the best interest of the company if it is not an ethical decision to start with. Recently, there have been an awful lot of corporate scandals, um, and they have been throughout corporate history, but we seem to have had quite a lot in the last 20 years. And all of these corporate scandals have been based on some unethical behavior. It's not as a result of a poor business decision in terms of a strategy that didn't work or some external risk that came into the business, such as an economic downturn or even a natural disaster. These were actually conscious business decisions that people took to commit a crime or to do something unethical with the intention that it would benefit the business, at least in the short term, and there would be some upside gains for them. For Venture Investments in 2010, the CEO, Arthur J. Brown, embezzled billions of rands of investors' funds. And this is little old ladies' retirement money that he embezzled. The Land Bank has had instances of money laundering and fraud by their former CEO, and who was also a former housing MEC in Limpopo. Tiger Brands was involved in the bread price fixing cartels, as was Pioneer Foods and some of the other bread companies. And if you consider that bread is the daily staple of so many people in our community, that those people had the price driven up against them as a result of this behavior, can really illustrate how the downside is felt by the community and the customer base. And then in 2018, the listeriosis outbreak, which we don't know yet because it hasn't been tested in court, but it looks like their policies around their supplier control and their product quality had more of a focus on cost cutting than it did on prioritizing health. In the US, Bernie Madoff investments were guilty of, or at least he as an individual managed to set up a 50 billion rand Ponzi scheme, which defrauded a great number of very wealthy people in the States, including movie stars and politicians. It didn't have such a lower level impact, but it still had a significant impact because people did lose their jobs as a result of this. And then we know all too well the goings on at Eskom, Transnet, Denel, SAA, SABC, KPMG, the state capture sagas, and those are well documented in the media, and court cases still have to come out around those. It looks like in terms of SAA, their chairman Dudumeni will be has been charged with delinquency in her capacity as a director. So we'll have to see what damages came out of that. But from the perspective of all of the people who work in those state entities or even in private entities that are impacted by poor ethical behavior, they really feel the brunt of it. They lose their positions, contractors lose their contracts. The construction sector was very badly hit by collusive conduct when it was found that in building the World Cup soccer stadiums, most of the major players had colluded in terms of which stadiums they would be awarded and at what prices, so they could keep the prices at a high level, and there would be no price cutting or undercutting of each other, and that natural element of competition was taken out of the market, and the government ended up overpaying substantially for these soccer stadiums far more than they would have before. The fines that those companies and others had levied against them, as well as a downturn in the infrastructure economy, led to the demise of some of these companies, and of the ones that we have in our slide here. Wilson Bailey is really the only one that remains. Avenge, Group 5, Basil Reed, Stefanucci stocks are on the cusp of, or if not already in business rescue. And then our most famous South African incident of unethical behavior is Steinhoff. We are yet to discover the full extent of the frauds that took place there, but we do have a good idea of what happened so far. And this looks like it was massive year on year false financial reporting that was taking place. And in a way, what was being done was that the financial reports would be correct, but not all the information would have been disclosed to the auditors, or there would have been active ways of hiding debt instruments, which were then not consolidated into the Steinhoff accounts and didn't show on the balance sheet. So investors didn't have a full picture of the company's exposure. And what the executives of Steinhoff have said is that they followed the letter of the law in terms of financial reporting. And it could be that they are correct in that regard. But in terms of looking at the bigger picture, there is definitely evidence of unethical decision making. And it raises a very interesting question around simply complying with the law may not necessarily mean that you have behaved ethically. You need to have a look at the whole set of circumstances in which an event took place to determine whether or not somebody acted ethically. This is not a time to measure things through a narrow margin. Let's look at the definition of ethics. Essentially, this is considering what is good and right for yourself and for others. It is as simple as that. What is good and right for us? You and me and us as the collective. And then treating others as you would like to be treated yourself. So I doubt very much whether Marcus Jooste would have been inclined to invest his money in a company with a CEO who operated on the same basis that he operated Steinhoff. In terms of a company, this means that ethical values need to be applied in terms of all decision making, how the company conducts itself, its relationship with its stakeholders, and its broader society. Integrity is also an important component of ethics. In relation to governance and ethics, it means possessing the quality of being honest and having strong moral principles. So whilst the letter of the law, if we followed it meticulously, we may not have broken the law. There may have been poorly drafted regulations, there may have been loopholes that we could utilize to our benefit in how we reported our financials, or how we made decisions, or how we concluded contracts with our suppliers. At the end of the day, on top of what the minimum requirement is that is expected from us as legally compliant citizens, we have a duty to exercise a honest and moral basis on which we make our decisions. There needs to be consistency between strong ethical and moral principles on one hand and our actual conduct. This is particularly important with regards to annual financial statements and external reporting to our stakeholders and our shareholders. Annual financial statements and integrated reports are really the core of information that is going to be made public about the company. So all of those stakeholders, and particularly shareholders being the investors into the company, need to be able to rely on those annual financial statements in order to make good decisions and to determine how it is that their own rights or interests are impacted by how the company operates. So those annual financial statements and that reporting needs to be reliable, and it needs to be useful. When we talk about reporting being reliable or reliability of reporting, we're talking about its validity, its accuracy, and how complete it is. And when we talk about usefulness, we talk about consistency, its relevance, and its measurability. So while Steinhoff may have an argument to say that it didn't breach any accounting rules, could one honestly say that one could rely on their financial reporting? I don't think so. Could one consider it complete or accurate, consistent, or even relevant with regard to the risk that stakeholders were facing? Certainly not. And if you left out major components of your financial reporting, such as off balance sheet debt instruments, then how do we measure those financials year on year? How do we know how the company really is reporting? So at the end of the day, it's crucial for ethics to find its way into a regulated system of reporting. In terms of ethical culture, reducing risk, and demonstrating that commitment to integrities, companies need to ensure that top management displays strong and visible support for ethics. So we have this frequently heard reference to tone at the top. So it starts with the leadership. If leadership is ethical, so there can be a reasonable expectation that there will be ethical conduct throughout the organization. Or at least when they find that there is unethical conduct, they're able to deal with it. If, however, there is unethical conduct right at the top of the business, it makes it very difficult for anyone underneath that management level to persuade or to enforce or even to be expected to adhere to ethical conduct themselves. Companies must ensure that their ethical values are included in their mission statement and their codes of conduct. We often see mission statements of companies, but we need to incorporate into those mission statements a hub, a central hub around ethics, so that the entire business model is focused on an ethical way of doing business. Codes of conduct are very useful methods to incorporate ethics, to formalize ethics and ethical procedures into businesses. You can enforce your ethical conduct, your codes of ethics, by appointing ethics officers who have a specific role around looking after ethics and focusing on the day-to-day management of issues that could impede ethical behavior, and just to educate on what ethical behavior entails. You can also create incentives for ethics through training and set up ethical helplines such as, info at ethics, whatever your company's name is. There can be an anonymous email address, anonymous tip-off lines. There's nothing quite like a fun training day to get people excited about ethics and illustrate what it means for employees on a day-to-day basis. Once you have a system in place, you need to be able to evaluate that system on an ongoing basis, which means that you need to carry out audits and evaluations on how well that management system is working, and then reward where it is working and sanction or change where it is not working. People also need to be held accountable for unethical behavior. So once you've incorporated ethics into your codes of conduct, you can then hold employees responsible for unethical conduct. And there's nothing quite like learning from somebody else's mistake to make sure other employees don't follow suit. The board needs to be, as its role as a center of corporate governance, ethical in its procedures and how it manages ethics processes. So setting up committees that are specifically focused on ethics becomes even more important. As you know, the Social and Ethics Committee is required by law, by the Companies Act, for any company which is a state-owned company, a listed company, or a company with a public interest score of over 500. So the board really has an active role in how it formalizes ethical procedures throughout a company. In terms of business ethics, in the day-to-day application of a company's business, this means that it must conclude all aspects of its business and its relationships with its stakeholders in an ethical manner. And again, think about how broad a stakeholder group can be: employees, partners, clients, shareholders, suppliers, communities, the natural environment. These are all stakeholders in our business. Thinking back to the six capitals that King bases so much of their reporting and risk management reliance on. It also includes concepts around corporate social responsibility. These were regulated, as you will remember, under the 2003 Black Economic Empowerment Act, and then obviously through the 2013 amendments, and it was renamed social and ethical social, I beg your pardon, social and economic development spend. But companies have these CSR projects in place, and they need to have an ethical basis to how they operate. They can't be operating in a manner which appears on the outset to be a socially responsible initiative, but actually is simply rewarding internally management or shareholders and actually not having an impact on communities. They need to actually be used as tools for progressing corporate citizenship and this responsibility that the company has to be seen to be a good corporate citizen. How a company conducts itself in its business is defined by its core values. So trust, honesty, respect, fairness, that needs to be reflected throughout all its policies, all its practices, and its decision making. There needs to be a body of evidence in how the company operates that shows that it implements good ethical business practices. How it complies and its legal standards and its adherence to internal rules and regulations, that's a minimum requirement. So a company must obviously comply with all the laws, and once a policy is made by a company and approved by the board, it becomes a law for the company. So that sets the baseline by which the company must comply. But those policies that the company implements and its own rules and its internal regulations must reflect ethical values. And then over and above, as I've said, simply complying with law, that compliance needs to reflect ethical values. Companies really have moved from simply being compliance-based, legal-driven processes through to an expectation that they have a broader base of ethical values in how they make their decisions. And this largely comes from that stakeholder inclusive approach that King has been promoting since 1994. And we can see that in how a company treats its employees, its obedience with the law, the nature and the quality of the relationships it wishes to have with its stakeholders. It's just that one step further. Business ethics are not necessarily easy to implement. It might be easy to define ethics as being something that is good and right for me and for you in the community. But what does that mean when you actually try and bring it into a business environment? Conflicts of interest happen as a matter of course, and they can be completely innocent and they can be totally nefarious and evil. It depends on the circumstances, but conflicts of interest will be the biggest driver of low ethical behavior. Financial and accounting integrity is an area where there's a great deal of subjectivity around how do we apply those complicated accounting regulations so that our accounts look better, our financial performance looks better. Ultimately, we may not break the law, but does it tell the whole picture to the reader? Corruption and bribery have become a manner of doing business, particularly in South Africa, and how one looks at that can be quite subjective too. So it's very easy to say, to offer somebody R1 million to award you a contract. That's clearly a corrupt activity, that's clearly bribery. There might be less obvious instances where things like golf days and a bottle of champagne may fall into bribery, and they may be done with the intention of corruption playing out. Privacy of our employees and our customer base is also an area where ethical behavior has to be considered. Poppy has now come into effect, but notwithstanding that, there's always been an obligation to maintain secrecy around certainly personal information, ID numbers, salary information, medical history, some employment history, and companies have over and above the regulations, an ethical duty to make sure that they maintain or put in place steps to maintain that appropriate level of privacy. Ethical advertising is really one that you can have a very long and interesting discussion on, and really illustrates subjectivity. And all one needs to do is look at Nando's. You either love them or you hate them, or you love some or or you hate others, but you definitely have an opinion on the content of their advertising. Some people think that they push the envelope too far, that they take too many jibes where they shouldn't. That's one area of debate. Another area of debate might be in simply saying things about your product and what it does that is not true or correct. Slimming teas and slimming products are infamous for this sort of thing. They will tell you that you will guarantee to lose 10 kilos in a week if you drink this dreadful product. What they don't tell you is that you're going to have such terrible diarrhea as a result of drinking this product that yes, you might lose 10 kilos, but you'll probably end up in hospital once you've done it. So think about some of the advertising that takes place around you. How ethical is that actual advert in how it presents what the company can deliver? Bioethics relates to people's biological information. So from things like what weight and height and age and gender, right through to your fingerprints and your medical history, skin samples, um, DNA samples that might be taken at a crime scene, hair that comes out of your hair in a hairbrush, and how that gets into a broader audience might even have an implication in bioethics and how that's managed. So if there's any company that comes into contact with or has to manage that sort of information, and that sort of tangible product almost, has even more obligation to make sure that they are looking out for the ethical practices around how they manage people's bioethic information. And then AI, artificial intelligence, that's becoming more and more prevalent. As technology develops, we have the ability to have robots that make decisions. Robots don't have a conscience, so they can't make a decision outside of the information that they've been pre-programmed with. So what information do you pre-program your robot with so that it can make certain decisions? That might be quite a small function in terms of just using a bank app where you put in certain of your personal information, your age, your demographic, where you live, what your education levels are, and what your interests are. And the bank may pull that information through a robotic analysis system, an algorithm, and they will then know what products will suit you best. That's quite harmless, but there is some degree of ethics around that, not only from the point of view of protecting the privacy of that information, but what information do we then punt to our customers once we know those demographics. And it can go right through to some very extreme cases, such as these self-drive cars. So in an instance with a self-drive car, one of the programming features that it has to have is if there is an unavoidable accident, an unavoidable collision, something has collided with the vehicle and the vehicle is now on a trajectory. What must the vehicle do? And it comes down to a question of the least damage possible. So if there's a crowd of people and if there's a vacant parking lot, the vehicle must do what it needs to do to veer towards the vacant parking lot. That's very easy to understand. What if the options available to the car are a crowd of people or one lady pushing a pram? What are the ethical options that that car can make in that choice? Somebody has to program that car accordingly, and that makes it a very frightening thought. I certainly wouldn't like to be that person. Ethical behavior adds tremendous amount of value to companies, and there's various ways in which this can be done. Simply by ensuring that you remain sustainable by avoiding insolvency, paying an awful amount of fines, such as the construction companies had to do after the competition tribunal found them guilty of collusive practices. Lawsuits can devastate companies. I think we all know the story of Erin Brockovich and the multi-million rand settlement that P&G had to pay out to a large number of people that are poisoned through improper water management practices. Criminal charges that can be laid against directors on behalf of the conduct of companies. Corporate scandals in the last few years have really illustrated that these volumes of money that companies may have to hand over as a result of some unethical behavior can really damage that company's ability to remain in business. It can also protect and strengthen sales and brand image and reputations. There's a great deal of surveys and information, and you only have to go onto Twitter to see live examples of this, where consumers believe that companies have a larger responsibility, and not merely in giving money, but also in how they market their products and how they conduct themselves. So the fast food industry is a good example of this, where there was a great deal of campaigning to some extent led by Michelle Obama around the fast food industry and how they labeled their food so that people understood what the levels of fat or sodium or sugar were in those food items so they could make an educated choice about consuming those products and the impact it might have on their health. Consumers have also become a lot more worldly wise about their ability to punish companies for unethical behavior through social actions and boycotts and those sort of things. Probably one of the most significant boycotts that ever happened in history was the bus boycott in the 1960s, which was started by Rosa Parks, where Black Americans stopped using the buses, and the bus companies were literally going to fail unless they changed their policies around discrimination. More recently, Spur suffered tremendous financial damage after it failed to address a racist incident that happened in one of the restaurants, and was very disappointing in this day and age that these things still take place, and the company just didn't deal with it very well, and there was a great social outpour about that, and the boycott was so substantial it made a significant financial dent on Spur's performance, and a couple of branches had to close down as a result. Ethical behavior can also protect a company in times of stress and change, and can be a substantial benefit that a company has to rely on when it is going through some sort of challenge, where possibly there is a merger or an acquisition or restructuring that's happening, and employees don't have that normal degree of management guidance that they might have, or there are new components of responsibilities. um, those companies can rely on the fact that they can say to their employees and their stakeholders, trust us. Trust us through this difficult process. We've been good to you for the last 50 years. You've built up trust with us. Continue to trust us. We will look after your best interests. And if you have a look at some of the companies that feature regularly in the top employers, Clicks and Vodacom appear there regularly. And I think if I worked for either of those companies and they said to me, this sucks right now, this whole COVID lockdown process, but trust us, we will look after you, I think I would be able to invest my trust in that. And that brings us to strengthening employee loyalty and commitment. There's a lot of evidence that suggests that employees will go over and above to assist companies in challenging times when they know that that company is going to look after them, and there is a greater degree of loyalty that will be demonstrated to companies that have illustrated that good value and ethical practices in their organization. Companies can also avoid prescriptive government regulations. One sad truth is the reason why we have so many regulations is to close the loopholes that companies have found in regulations and then chosen to act unethically, albeit not illegally, such as possibly a Steinhoff. So, for example, in Steinhoff, one of the things that happened was, as I've alluded to before, they had hidden all their debt in unrelated companies off balance sheet. And as a result of that, the JSE listings requirements now reflect a change which specifically says that the audit committee must confirm to shareholders in the annual financial statements that they have considered the broader organization outside of just those entities that need to be consolidated into the financial statements. So there's a direct relationship between what Steinhoff did and new regulations that have come in. So if companies were to behave more ethically on an ongoing basis, we would have less regulation because it wouldn't be needed. Companies can also avoid a loss of business. Large companies have realized that there is this tremendous value in behaving ethically, so they tend to look downstream at their suppliers and their customers and hold them accountable too for their ethical behavior, and they can cancel contracts as a result of unethical behavior from certain suppliers. So in 2001, Royal Dutch Shell cancelled 100 contracts with companies that failed to adhere to their ethical, health and safety and environmental policies, which is quite a significant thing to do, to go to your stakeholders and say, you know what, we're holding you accountable to, you must behave ethically. And governments may also cancel contracts or otherwise punish companies which are perceived to be unethical. So I'll just put this question out there for you to consider for your own deliberations. I don't know what the answer is. This is just something for you to think about. During the lockdown, the SME business support packages are, it looks like, only being allocated to companies that are BEE compliant, notwithstanding the fact that the BEE scorecard is a voluntary scorecard. It is in the codes of good practice. It is not a legislated practice. However, government is using this as a mechanism to promote BEE or punish companies that haven't taken the opportunities to become BEE compliant. So there's a bit of food for thought for you. Ethical behavior can also limit vulnerability to activist pressure and boycotts. So shareholders and stakeholders, as you know, have found their voice in the last 20 years and become particularly vocal around their rights and their expectations of how companies should behave. Um, Indeed, there have been even more nefarious things where criminals have launched ransomware attacks against certain companies where they hold their information in ransom, and then the company must pay, and then they unlock that information. Companies can also show how they have demonstrated positive um, integrity capital, so to speak, amongst their stakeholders. And a good example of this is Nike, who recently they supported Colin Kaepernick's Take a Knee campaign, which he's an American football player, and instead of standing to sing the national anthem at the beginning of every football match, he kneels and puts his hand on his heart. And he does this in protest of unfair police action against the members of the black community in America. And he takes a lot of flack for that, but Nike actively supported him. And whilst there were people who were very angry at Nike to do it, funnily enough, Nike's sales increased massively, having promoted Colin Kaepernick's campaign. So the antithesis is that they can really use this as a valuable business tool. And then ethical behavior also leads to greater access to capital, because companies that can demonstrate commitments to ethical behavior are going to be companies that are more sustainable. So an unsustainable business practice, such as not considering the climate change impact that might have on your business, funders are not going to want to lend money, certainly not vast amounts of money, to companies that they're not sure will be sustainable. So in a recent um, conference, I heard some investors say that they would not invest in companies that didn't have climate change policies, simply because they were that worried about those companies' sustainable business practices going forward. So you can definitely take ethical behavior to the bank, so to speak. Let's have a look at professional business ethics. So in terms of a profession, like a doctor or a lawyer or an accountant, and in our instances, a company secretary, where there is a professional organization that governs your profession and your occupation. It's generally a specialized field of knowledge or subject. It usually applies to occupants that involve some sort of prolonged academic training and a formal qualification, which is what you've embarked on now. And there's usually some degree of regulation around it, either through set examinations of confidence or an ethical code of practice that you're required to maintain. Doctors have to take the Hippocratic Oath. Lawyers have to pass board exams. Professionals have specific characteristics. Typically, they are based on skill and theoretical knowledge. They are members of a professional association. They have worked for an extensive period in terms of their education. They've had some degree of testing of their competence, so they've had to pass a board exam or undertake a certain period of tutorship. There's some component of institutional training that they have to go through. They have some license to operate through their membership. They have some autonomy in that they can practice their profession on their own or through small groups. They don't necessarily need to be part of a larger organization. They have gained control over their own theoretical knowledge. They're governed by some code of conduct or ethics against which a professional body can hold them accountable. They have some degree of self-regulation and independence from government. They have a component of public service and altruism in that they're expected by society to donate a certain portion of their skills, so to speak, for the greater good of society. So lawyers will often be involved in pro bono cases. Doctors contribute to public health. You as a company secretary will probably be asked to volunteer on a lot of NGO organizations, which is a great way of gaining experience. Professionals tend to have some sort of monopoly over a certain component of the body. They have legal recognition, and to the extent that people who have not met their requirements can't join their professional body or practice that profession. There's some degree of control or advertising on their, I beg your pardon, control of remuneration and advertising. So lawyers have scales of fees that they can charge. They can only advertise in certain instances. Our industry is far less regulated in that regard. They tend to have a high status and rewards. They tend to be in the higher earners in a particular economy, and they tend to have some degree of prestige and status. They can typically have individual clients who will, or they could work for a company, but typically they can earn their own income through individual fee-paying clients. They offer some sort of reassurance because they've gone through all the professional training and they have this license to operate and they are properly certified. There is some public assurance that they can deliver on the job and that they are the professionals of a certain standard. And that also talks to their legitimacy. There's a clear legal authority in some instances for them to act. They have an inaccessible body of knowledge, i.e., you can't get that knowledge unless you actually study that subject and you go through all of those training requirements and the board exams, etc. They have a degree of mobility, so they can transfer those skills into various industries, and they're not limited geographically in many instances, um, and they can set their own degree of employment opportunities. Professionals are expected to have a certain degree of behavior. When you go to your doctor or a lawyer or an accountant, you expect them to behave in a certain manner. Integrity being probably the most prominent one. You expect them to be trustworthy and honest. You expect them to act with objectivity, which means that they have this degree of professional independence. They're not acting with a conflict of interest or bias that might override their judgments. You believe that they will act in your best interests. They have an obligation to act with competency and due care. So similar to a director taking care of a company, so when you go to a professional person, you expect them to take care of you with your best interests at heart. There's usually an element of confidentiality attached to professional behavior. It's very easy to think of in terms of doctors and lawyers, where we know well that they have strict confidential records and they may not share those without your permission. And the same applies to company secretaries acting in a board environment. What you hear in a board and what you see and behavior you observe is strictly confidential, and the board knows that it needs to trust you. There is an expectation that professionals will conduct themselves properly, i.e., in a manner consistent with good reputational behavior. You're unlikely to do anything radical or anything that might discredit your professional body. A few years ago, there was a lady who entered Idols, the singing competition, and in very little clothes, and then posed with her boyfriend, again in almost no clothes at all, for the Sunday paper. And it turns out she was an advocate, and so was he. And they were both members of the Independent Bar Council, and she became known as Advocate Barbie, and she was struck off the roll for her behavior. Didn't add much to the profession. Professionals are also expected to have technical and professional standards that they are required to meet in terms of the service that they deliver. So having looked at generally at ethics across businesses and the expectations that are on professional people such as ourselves, let's have a look at some specific instances of corruption and what corruption means in a business environment. This is the misuse of power by somebody to whom it has been entrusted for their own personal gain. The most common form of corruption will be bribery, where the giving or receiving of money or a gift or some other advantage is given as an inducement to do something illegal or dishonest, or which generally breaches trust in the course of business. There are quite a lot of anti-corruption laws that find their way into various legislation that prohibit the offer and payment and promise to pay or authorization to pay any money, gift, or anything of value to a government official if the purpose of that payment is to influence any act or decision of that official, or to induce them to do anything or to act in violation of their duties, or to secure some sort of improper advantage, or to induce that official to use their influence with their government agency or department, or in order to assist in obtaining or retaining business or directing business to someone. And we can see this happen many instances of tender fraud. Given the tremendous amount of value that is attached to tenders, there is a great deal of enticement or temptation to get involved in this sort of behavior to secure those valuable tenders. However, corruption is a criminal offense. All of these things are criminal offenses. Even in the event that a payment of a bribe was not actually made in order to obtain the incurring of a business, merely corrupting someone in order to induce them to act in that certain way, even if you didn't actually pay them, would be considered a crime. The other area, which is also a crime and is a form of bribery, is facilitation payments. Now, this is quite tricky, and this is one of these instances where one may not necessarily know that you're behaving unethically or breaching the law. So, where there's a sum involved, typically to a minor or low-level official, in order to facilitate a certain amount of paperwork getting done. CSSA had a big scandal about 10 years ago because there were law firms that were actually paying the CSSA workers to give preference to their documents. The CSSA workers, I suppose, should have known better, and the law firms definitely should have known better than to do that. These were not large amounts of money, and in some instances they were merely just buying them lunch because they were working long hours. But the intention really was that those law firms would get preferential treatment in terms of their paperwork. And so that facilitation payment was made with the intention of it being a bribe, being a payment that is made to secure some sort of action or service that an individual or a company would be routinely or legally entitled to, such as your CSSA documents or simply getting your visa. I don't know how many of you have been through the border at Mozambique, where you have to put an extra page into the back of your passport, which is a R100 note, and then you don't have to stand in the awful queue. Let's have a look at who constitutes a government official. This is an officer or an employee of the government or a department or an agency or any instrument of government or any person acting in that capacity on behalf of government. So it's a very broad range. So even a subcontractor could be included in that. that's been hired by government to perform a certain function. Any officer or employee in a public international organization, or a person acting in an official capacity on behalf of a public international organization, so the UN, the World Health Organization, all of those organizations those people would be considered government officials. Employees of a company or a business in which a government body has an ownership interest. So even Telkom, which has a large government interest, to some extent, those employees could be considered government officials. Political parties or members of political parties or candidates for political office, and obviously these have a great deal of risk attached to them because of the ability to persuade political power. It will also extend to persons who are known or suspected, at least, there's a reasonable degree of certainty, may be family members of government officials. So simply because you bribed the wife of a minister doesn't mean that you didn't bribe a government official. It is broader than that, and it includes associates and family members to some extent. However, corruption is not limited to government relationships, and whilst we give our state-owned entities a very hard time, particularly after state capture and the whole Gupta sagas, private corporations are no less innocent. So these are typically going to be corrupt activities that don't involve government organizations and that will be between each other. Two companies making a deal together, and there'll be corruption between them, very much like what happened in the construction sector. So there is the prosecution for public corruption in the Prevention of Corrupt, Prevention and Combating of Corrupt Activities Act, which we shortened to PRECA, which specifies provisions that deal with corruption in the private sector, particularly with regard to private corruption. And these are identified as bribery in giving assistance with regards to contracts, auctions, foreign public officials, public officers. So even if it's a government official, it will still fall under PRECA. Sporting events, witnesses, witness tampering, accepting or giving or offering a gratification, which is some sort of gift or reward or a tip, which might be disproportional to the services rendered. So if you give me this contract, I will send you and your family overseas, things like that. Dealing with using, holding, or receiving or concealing any sort of gratification in relation to any office, and fraudulently acquiring a private interest. This might be a good example of this might be by doctoring share certificates, and then any offences in relation to tenders, whether they be private tenders or public tenders. There has to be a process through which that tender is operated that is fair and is transparent and relates equally to all parties, and opportunities to bribe or allow corruption in tenders need to be very well managed. PRECA makes it an offence not to report an attempted or actual corrupt transaction. So there is unfortunately an onus on the innocent bystander. So you may innocently come across this sort of activity taking place in your business, and if you don't report it to the responsible officials, whoever that might be in the circumstances, you yourself have gone and committed a crime. So I think it's a very little known act, and I'm not sure if anyone has actually been persecuted in this regard, but it's worth knowing that you do have that responsibility. Let's have a look at some of the other forms of corruption, and particularly bribery. This is offering, giving, receiving, or soliciting any item of value or influencing the actions of an official, in the discharge of a public or legal duty. It can be a gift that is bestowed on this person to influence their conduct, and any sort of gift or any sort of value, anything that value can be attached to. So it can be money, goods, a right to do something, a privilege, some sort of valuable object, some sort of advantage, or even a promise um, of any of these things in the future, or a vote in favor of somebody, anything that would influence that person's official capacity. Bribery requires two people, one to give the bribe and one to take it. Even if there is a go-between, there is still at least two parties in it. But do bear in mind that even if you offer a bribe, the other person who doesn't take it, you will still be guilty of having committed some form of corruption. So there's some examples here of bribery: a citizen seeking paperwork to or utility line connections may bribe an official for faster service, construction companies who may bribe civil servants for the award of a contract, motorists bribing police officers to not to issue a speeding ticket, and drug smugglers who wish to bribe judges for reduced penalties. There's some other forms of corruption: collusion, which is the secret illegal operation or conspiracy in order to deceive others; conflicts of interest, where a person is in a position to derive personal benefit from actions or decisions they make in their own capacity; cronyism is favors for your friends, starts to sound familiar under the Zuma era; embezzlement is where you are trusted with funds or property and you use those for your own benefit; extortion, where a person unlawfully obtains money, property, or services from another due to coercion or intimidation or threats against that person; fees and commission, essentially facilitation payments that are made which are not in line with standard practices of that particular area with the aim of influencing a decision; gratification, we've spoken about; gifts, hospitality, that sort of thing falls under gratification, which will, nice bottle of Moe in order to persuade somebody to do something on your behalf; graft, which is similar to bribery but generally something of a smaller value, but also to an official, not part of his official pay in order to do his work, very similar to bribery in its intention. Kickbacks, where an official receives a share of misappropriated funds in order for organizing some sort of award of a tender or whatnot; nepotism, hiring your family members; patronage, this one is a bit tricky because sometimes it happens in terms of law and is legislated, and the fine line is very narrow indeed. And this is really support or encouragement or privilege or financial aid given to an organization. The idea being that there will be the use of state resources will then benefit the person who paid those funds. And where you see this in particular is the corporate contributors to presidential campaigns in the US, who then have an expectation of favorable regulations under a particular administration once elected. So the fuel industry may pay an awful lot of money to Donald Trump's campaign, with the idea being that that money will help him to be elected. The trade-off being that once he's elected, he will squash environmental legislation that is not favorable to oil companies. And in the trading of information, so where employees receive information which has a value to it and then they sell it, or they offer it in bribes, they accept bribes. And this is typically where we see insider trading taking place, where somebody has price sensitive information in a company and they sell that information to an interested shareholder. the consequences of corruption can be quite sad, and the massive amounts of money that we have seen reported in the media, between 300 and 500 billion rand, and even bigger amounts that were lost through state capture alone, is heartbreaking, because that's a tremendous amount of money. I think one of the amounts that stuck with me was quoted by Richard Spoor, who's a well-known human rights lawyer. Every household in South Africa could have received 30,000 rand um, in, out of that. That's what that value of that corruption could have made that difference to families. And you can imagine, if you took every family in South Africa 30,000 rand, what sort of difference that would make to them. And it would have cost the country nothing when you considered that the same amount of money simply lined pockets of corrupt businessmen and corrupt politicians. And it's very sad for our country that this is what's happened. Some of these consequences have direct impacts where we may not necessarily see. So a slow economic growth, one of the reasons that South Africa has had slow economic growth in the last 10 years is because of the very high levels of corruption. There has also been substantially reduced levels of investment into the country because of corruption. Investors are less likely to want to place at risk high amounts of money that are simply going to become the victim of corruption. Where there are aid sources, aid agencies in development countries are also going to be less likely to want to bring their assistance here and invest their money here in aiding society, where the money simply is laundered into and redirected into other areas. I did see recently a report out of Zimbabwe that government had bought a very large number of luxury Land Rovers for its officials, but has only 7 ventilators across the whole country. So certainly there's no international aid agencies who wish to bring their money into Zimbabwe as a consequence of how that money is managed. Tax evasion. Oh, it's so tempting to avoid the tax man, it really is. But the more tax evasion, criminal tax evasion that happens, so the lower amount of tax revenue the country is able to collect. And with a lower amount of money coming in through taxes, so the country has less money to invest back into things like hospitals and schools and public infrastructure that everybody benefits from, but particularly poor people rely on. And that's a really sad consequence. It can also then have a negative impact on the quality of infrastructure and public services. So once the country has less money, there's less money in the coffers to invest in hospitals, so the quality goes down, and you see that suffering exacerbated by people who simply just rely on tax services. And it can distort the composition of government expenditure. The less expenditure on basic welfare, um, because a lot more money has been paid in terms of bribes. There are happily some methods in terms of preventing corruption, and some of these methods may seem very small. Whistleblower programs are tremendously valuable too. This is where you have a structure in place so that anybody who comes across corruption or unethical behavior or any unfair behavior, including discrimination of any kind, can report it on an anonymous basis through a secure structure in an organization, and that claim can then be investigated and taken up, and that whistleblower will not suffer any type of prejudice as a result of having made that disclosure. Internal controls and internal financial controls are also very, very important and critical on a day-to-day basis, and must be done on a risk basis. So one has to look at your business and assess where is there risk for corrupt activities to take place simply in how we do business on a day-to-day basis, and what procedures can we build in to eliminate and reduce that instance that corruption and bribery might take place. Internal audit will then be an independent branch in the company who can then go back and review those internal controls and internal financial controls and assess whether or not they are sufficient and they are protecting the company adequately. Compliance management systems are also useful. You don't have to go and buy very expensive software in terms of risk management or compliance management. In smaller organizations, you can use an Excel spreadsheet, and what you do is you identify all the key legislation that applies to the company and you illustrate how you go about complying. You have a little checklist and you make sure that you comply with those particular pieces of legislation, and where you don't comply, you put something in place to make sure that you are compliant. And that can be of a great deal of assistance, and it can also pick up areas where bribery and corruption and unethical behavior can take place. Education programs are very important, as I've mentioned, and take people with you on the journey of ethics. Don't be judgmental about what somebody may believe is unethical or is ethical behavior. In different religions, in different cultures, different practices are acceptable or unacceptable. In terms of the business, though, and how that operates, that needs to be done in terms of the code of conduct, which needs to reflect the Constitution of South Africa. So your code of conduct may not necessarily align with everybody's view of ethics. And you need to make sure that they understand what the company's code of conduct says and what behavior is expected from the employees. And then where there's a gap, you need to do education and take that positive initiative. On a more practical component, information and technology governance will be critical as well, because so much of corruption and bribery and other unethical behaviors will happen through either your information systems or through your technology systems. There's a good avenue of reducing those risks if you can protect those sources. So identify where those leaks or opportunities may exist in your business and see what you can do to close those gaps. In terms of international expectations on corruption, there is an organization called Transparency International, and they take key actions or their recommended actions that need to take place in countries as a whole with regard to ending public corruption. They have these 5 recommendations. Firstly, end impunity by holding wrongdoers accountable. It will be very interesting to see what happens Jacob Zuma's upcoming trial, and to what extent he has to stand to be held accountable for state capture. Then reform public administration and finance management. We have pretty good legislation in the PFMA and the MMFA. However, they are quite cumbersome and bureaucratic, and they do have this overriding ability for government officials to get involved and override decisions that should be made independently by the boards and management of those entities. So reforming those bits of legislation can also help in improving the end of or limiting corruption. Promoting transparency and access to information will be important, because the more information we have, the more ability we have to identify whether or not there has been any unethical behavior. We also need to empower our citizens to hold governments accountable for their corrupt activities. So there needs to be a general view amongst the citizens that they shouldn't find behavior acceptable simply because it was done by a person in power. That might be quite tricky in some areas, particularly where there is a president or a leader who has nostalgic value, predominantly because they were part of the apartheid struggle, and therefore is viewed in a way of being able to do what they like, or has some entitlement to certain privileges that really they shouldn't have in their positions of power that they now hold. So those citizens need to be encouraged to speak out and hold their officials accountable in a democratic society. Money laundering is a big problem and a big funder when it comes to things around unethical behavior and corruption, and is generally used on an international scale to fund terrorist activities. Money laundering can be done through money transactions of actual cash through various structures that can be quite clever, but is more likely to be found in airtime, which has no real name attached to it. So it's very easy to buy and sell airtime in the form of a currency. Like you would use rands, you simply use airtime. Bitcoin and other online um, currencies, cryptocurrencies, similarly have that same type of value. So what Transparency International is recommending is that those international loopholes in law be closed and tightened off so that money laundering events can be detected and managed. And that brings us to the end of part 1.